What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is October 3rd of 2022. Today was the start of a brand new week, a brand new month, and a brand new quarter. So there is no better opportunity to turn over a new leaf in your trading and rise from the ashes. Today was actually a pretty good day in the market. We had the S&P 500 that finished up 2.64%. We had our NASDAQ QQQ finishing up 2.35%. Our IWM small caps, they finished up 2.65%. They were our big winner. The Dow Jones, we can't even call them the dogs. Maybe they're like the big dogs. They were up 2.61%. Very nice performance. And today the ARK Innovation ETF was the laggard. It was only up 0.45%. Pretty much all of these indices closed towards the upper end of their day's range. We did have a contraction in volatility across the board. Small cap breadth was very strong at 82%. We had 91.5% up volume. So very nice participation today. And the trend model flipped from a -3 all the way up to a +1 reading, team. So this is definitely good news. The good thing about using the trend model is you don't have to be worried about, oh my gosh, are we having a Lehman moment? Is this the bottom? What is the Fed going to do? Oh my gosh, my cousin said he's bearish, bullish, whatever. And then the guy on TV said this. You don't have to amalgamate everything in your mind. Using the trend model works pretty doggone good. Today's economic data, we had our U.S. factory activity expands the least since May 2020. Take a look at this. This was our 10 a.m. data release. We had the ISM manufacturing PMI for September. It came in at a 50.9 reading, and the consensus was a 52.2. Now, remember, over the past 2 or 3 weeks, we've been discussing this in detail, pretty much saying, hey, everyone, we're in an environment where good news is bad news and bad news is good news, right? So every time we were getting good economic data points, the market was selling off, the dollar was rallying. It was horrible. Now we finally got a bad data point, and apparently in this ISM report, we saw weaknesses in prices paid as well as the employment factor of the report. So I definitely think this actually helped the market. And remember, we've been talking about, oh my gosh, sentiment is so negative. Positioning is so negative. People are thinking there's going to be a Lehman moment. People are thinking the market's going to crash when the market actually just crashed. Pretty much everything is down. I always think it's funny. People always think the market's going to crash after the market crashed. If you look at most stocks are down 50 to 80% off their highs. With all these stocks down 80%, isn't that a crash? But now everyone thinks the market is going to crash. It's crazy. But anyway, I think due to all those factors, then also this weaker than expected data point, that actually was a boost for the market. VIX futures term structure. This is still inverted, team. At one point during the day, these two front months pretty much got flat. And it was oh man, this is a great thing. The VIX futures might be uninverting. But you can see we're still technically not out of the eye of the storm. Given this condition, we are still technically in a panic state within the market. Our FinViz heat map. Oh my gosh, one of these things is not like the other, team. Which one is it? Tesla. Oh my gosh, this was a train wreck today. So coming into the session, we had the news from Tesla, and they said, we had record deliveries for this latest quarter, but they did not meet the analyst expectations. I think the expectation was for 360K or 368. I think it was 342, so a little bit lighter. And the stock just got walloped. And I gotta say, I was pretty surprised. Tesla's typically, when the market's rallying and bonds are rallying and all the growth stocks are moving to the upside, Tesla's usually right there with all of those stocks. So I gotta say, I was expecting either, Tesla catches a bid into the end of the day, starts rallying, and just given the strength of the rest of the market and the timing of this sell-off, maybe it would be a little bit muted. Maybe it'll only finish down 5% or 4%. Tesla ended up closing on the lows, but what's also odd is I would expect, if Tesla keeps going down, it's going to drag down the rest of the market. But we pretty much have these two parallel universes where Tesla just behaved as if the market was still crashing, and everything else just pretty much had, pretty fantastic green session. Sectors. Best performing sectors were the XLE Energy ETF. We did get some news that there was going to be a potential production cut from OPEC given the weak energy prices. Remember, everyone was screaming their heads off last week about like hyperinflation. Oh my gosh, like it just won't stop. And like we literally have OPEC cutting production because they want to keep energy prices up. Because they were at like $75 a barrel as of last week or so. The XLK technology ETF did do well, up 3.1%. The material sector did very well. Also, gold miners are in our top momentum slot. Home builders were up 3.95%. Definitely a counter trend bounce right there. We had telecom up 4.07%. MSOS cannabis did well. The worst performers, we had KWeb only up 0.41%. And then I believe it was the ARK Innovation ETF, just up a smidge because Tesla's the largest holding. Style factors. Best performing style factor was the high beta, up 2.94%. And then we had size, which is the small caps, up 2.82%, followed by momentum, up 2.76%. So this is pretty risk on in terms of our style factors. And then in terms of options trades, what did we do today? We closed out a portion of our UUP December 16th puts for 72 cents. We had paid 48 cents for those. Looks like there's a typo here. My apologies. I have to fix that. But yeah, close this one out for about a 50% gain for about half of the trade. And then for an entry, I added to my ARK December 16th 43 strike calls for $2.20. I have an average cost of $3.90 for these. And I put here the largest holding Tesla is negative 8.18%. This ETF is barely red. I believe the short covering rally is coming soon. And look at this. This was an article that I pulled up. I noticed this came out on Friday. Short sellers betting against Cathie Wood's ARK ETFs are up $2.4 billion. This article was just talking about, oh my gosh, it's been so lucrative to short the ARK Innovation ETF. Isn't this great? Let's give them the pat on the back for their big win. And I noticed typically when you start to see like journalists that are catching on to a trade like this, and like, oh my gosh, you guys were so right. Let's celebrate how right you were. Usually that happens towards the end of a sequence. And especially if there's a lot of shorts that are still in this thing, it just adds more fuel. If we get any sort of good news on inflation, anything like that, I think this ARK Innovation ETF could really move. Of course, we do need some cooperation from Tesla. And that brings us to seasonality. Yeah, this is another thing that we have going for us. Not only did the trend model flip positive today, but the seasonality is actually very good into the end of the year. And we pretty much know most investors, they're either in cash or short. All right, let's take a look at the indices. S&P 500, and you can see our trend model, nice, bright, and green. All of our primary indicators are green. The secondary indicators are green as well. And S&P, what have we really been doing? Honestly, we've just been sideways for the last 6 trading sessions. So this can happen where you get to the end of a sell-off, and it's like, oh my gosh, we're just crashing. And like, honestly, the market's not really going anywhere. You're just kind of going sideways. But because you're so worn out, it feels like you're in the middle of a crash. And then lo and behold, all it takes is one good day to suddenly have all the people that sold over here just completely rethinking everything. Like, oh my gosh, I may have sold low. If we get one more good green candle, we're going to have erased all these losses from the past week. And yeah, I think it's just really a testament to how quickly things can change when you have price action that's, this bunched up like this. Another thing that definitely changed for the better heading into this week is we have our brand new weekly value areas, and almost all of these indices, they just ripped right through them in one fell swoop like a knife through butter. So I think throughout the rest of the week, if the market just continues to behave well, you start to see some investors putting on, test exposure. As institutions, they have to understand, like, a lot of these inflationary pressures are coming down. As much as everyone was screaming about hyperinflation is never going to end last week, a lot of the data, including the housing data now as well, commodities, a lot of it's really coming down. So, yeah, I would imagine, like, just given the light levels of exposure that asset managers have, I wouldn't be shocked at all if, like, we just end up having a pretty nice run here. Even if it's just like, maybe like a 5 or 6% rally, I feel like nothing has to change about the situation at all to get like a nice 5 or 6% move in the market, just with how, lopsided things got. Let's take a look at our NASDAQ and check this out. Boom, NASDAQ up 2.48%, and this one worked its way all the way through this. This is the 5-minute chart, excuse me. Sorry about that. My apologies. Hourly chart. Yeah, we are trading right above that weekly point of control, so that is definitely a good thing. And take a look at where we are on the daily chart. NASDAQ still looking, pretty grim, but we're above that 5-day EMA, so we're making progress. That's what it's all about. If you're looking like, did the market just make the all-time bottom, and is it going to go back to the highs? Like, if you have to make that decision in your mind in order to get long, it's very difficult. You're never going to end up making any decisions, because who knows if the market's going to go back to the high or whatever. I think it's just good if you look at incremental data points. Is the trend getting better or is the trend getting worse? And you make your decision off of those rather than like, oh my gosh, I have to call the generational bottom of whatever. It makes your life a lot easier. Russell 2000 also had a pretty big performance day. We're trading right up to the high end of this range we've been in for about the past week. And again, all it would take is one good day of price action, and suddenly we are challenging that 20-day simple moving average. So I do think the conditions are here. They're ripe for the taking for a lockout rally. The lockout rally pretty much just means a lot of investors, I was on Twitter Spaces earlier, pretty much everyone was bared up to their eyeballs. A lot of investors, with these conditions, they think it's going to be a Lehman moment, whatever. So today, they go, I missed the gap up. I'm going to wait, I'm going to short some or whatever. And the market just keeps going throughout the day, and it's like, well, now I can't buy, and it's already up 2.64%. It's probably going to crash anyway. What's the point? But then you just get one more good day of price action, and it's like, oh my gosh, we just took out 2 weeks of price action in 2 days. And then it just becomes that same thing, now I'm too late, whatever. And that's how you can really just get a lockout type of situation. And typically by the time they decide to get in, then they get rug pulled. But anyway, if we look at our volatility gauges as well, these pretty much all, they all fell today. We had the VIX that fell down to a 30.1 reading. Would love to see this get below a 30. I don't like how it's just could not close below 30. So we still have some more work to do. But you can see the VVIX as well. This one also closed down 2.98%. That's a pretty good look. And the TDEX as well. This measures tail hedging, was down 14%. So definitely good to see. In terms of our treasuries that just could not catch bids for so long, the 10-year treasury future was up pretty big, up 1.07%. That's a 1.28 ATR move. That's pretty sizable. And we are, we've already eclipsed, about the last 5, 6, 7 candles of price action, which is pretty good. 30-year treasuries, we are also seeing the same. So yeah, I think by and large with today's action, we can clearly and definitively say the technical trends are better, and a lot of the risk factors that were causing headwinds for the market last week, they are starting to get better. Like the dollar index, for example, was down 0.41%. Remember, this was going parabolic last week. Now we're starting to see that relief. So if you're just looking at this, objectively, it's very tough to say things are getting worse or anything like that. And you really just have to take these things, one day at a time. We were seeing some nice price action today. For example, crypto has been doing pretty well despite even the equity weakness. So if we look at our crypto dash, look at this. I think these names are definitely worth watching. You can see Ethereum and Bitcoin are both moving to the upside. What else did we see? Wolf, which is a name that we are currently long. This one definitely looking pretty interesting here, up 4.57%. And what's interesting about this name is just excellent technical pattern for a while. When the market just got incredibly weak, this one did get taken down with the market, but we held support at the 50-day SMA. We're now trading inside of this monthly value area, and you can just draw this little downward trend line from the past, maybe 1 or 2 weeks, and we're already trading, to the upper end of that trend line. So I think Wolf is looking pretty solid. Some other names that are trying to repair. MNTK, this is another one of our long positions, of 3.38%. It hung in there very well while the market was incredibly weak. So I definitely like the way that this one is shaping up. End phase, this stock finished up 3.29%. Not looking quite as good as some of the others. We're actually trading below the 50-day SMA, but this will be a good one to watch for tomorrow's session. What else do we have here? AHR. I think this is another good one for all viewers to have on the radar heading into tomorrow. I'm just trying to give you some ideas. I'm going to be doing more scanning tonight, and I'll be posting it within our Pristine Capital Discord. But AHR, another very interesting name, although this one reports earnings October 6th. That's another thing to be cognizant of, team. We have earnings season that is coming up. The banks begin to report not this Friday coming up, but I believe it's the following Friday. Definitely want to keep doing some scanning. Oh yeah, I'd be remiss if we did not go over the Tesla chart. Look at this. We did take out a downside VPOC at about 243.86, but it was not really too reassuring. Like, we just could not even manage a bounce, and we pretty much closed on the lows. Like, I would not be surprised if we get a thing, it's like Elon was selling today or something like that. It's always such a wild card with Tesla. But I think if you are looking for reasons where maybe the market is going to go south, I think it's likely going to emanate from Tesla, because this is the one stock that everyone's long, everyone believes in. And I think the worst case scenario would be Tesla starts making a beeline towards this 222 level down here, or this 203. Then it's going to be really tough for the headline indices to move, because this is just such a big name in those indices. So I think the happy path is tomorrow Tesla has a nice bounce, and I think the market just keeps ripping and celebrates that. But if Tesla's pretty weak again, this thing is so oversold, it really should be balancing here. That would definitely be a little bit of a concern. That being said, hope you all had an awesome trading day, and I will see you all tomorrow.